It's that time of the year. Your vacation is coming up. You can already hear the beach waves, feel the warm breeze, relax, and think about work. You really, really want it all to work out while you're away. Monday.com gives you and the team that peace of mind. When all work is on one platform and everyone's in sync, things just flow. Wherever you are, tap the banner to go to Monday.com.
Welcome back to another episode of Investies. I'm your host, Linda Garcia. This week on the podcast, we are going to discuss the crazy, volatile market that we experienced. I did not see this coming one bit when I recorded last week's episode on Thursday. It is Wednesday morning and things have completely turned upside down and then right side up again. This just goes to show that we can truly never time the market. I know I tell you this over and over. I mentioned it in the last episode. It's because this is real. There's no way for us to account for catalysts that are taking place that we aren't even paying attention to. And so I want us to go over what exactly happened in the market. And I also want to briefly talk about how so many of us reacted to this market. Not only that, but media loves to run with these narratives and inflict so much pain. And as quickly as we saw a ton of pain, we are now seeing so much recovery. But before we get into that, I wanted to share a little bit of some behind the scenes of Investies podcast. On August 1st of 2023, we uploaded our very first episode of Investies podcast. I wanted to just really quickly say a big happy birthday to Investies, but what I really want to say is a big thank you to Cosmic Standard. Jacob and Eliza, thank you so much for believing in my work. Thank you for being partners with me in this effort. Thank you for your valuable time and resources every single week to make sure that we have an episode. I am truly grateful to have you all as business partners on Investies, and I know that if it wasn't for you all, I would definitely not be doing this. So I just want to express my love and respect for the both of you, let you know how much I appreciate you. I know that releasing an episode every week is a lot of hard work, and somehow we have managed to only miss 1 week. I love you guys, and I'm so proud to be in partnership with you all, and I just want to thank you for always being kind and patient and supportive with me. I couldn't do this without you. A very happy birthday to Investies. And now back to our regularly scheduled program. The stock market year to date has been on an absolute tear. In its highs in July, we have grown by 20% year to date. I really want us to reflect on this, and I know there are episodes in the past where I stop and have us reflect. Let's take another one of those moments. We can expect, on average, for the stock market to increase 8 to 10% a year. A year. So to reach 20% growth in almost half a year, a little over half a year, that is absolutely remarkable. It is not normal, and it is also, honestly, not healthy. We have been on a pretty steep growth trajectory since October of 2023 without any real pauses or breaks in between. And so I feel like when we're on this continuous growth pattern, the moment that the market switches up on us, we start to panic. I started to get text messages, DMs from friends, family, community members on the stock market. Everyone was freaking out. What should I do? What do you think is happening? And this was a reminder to me of how quickly we forget about the natural movements in the market. So we're going to review emotions. But before we get into that, I also think it's important for us to take a moment and celebrate how many of us are paying attention, how many of us care. Even if we are triggered, the fact that we are in the space to even get triggered on what is happening in the economy, what is happening in our portfolios, what is happening with our investments, this is a moment to celebrate. I love having these conversations with you all and talking out through what we're feeling as we're learning to manage our money, as we're learning to grow as investors. So let's just take a moment and celebrate our participation in the market.
Shop Plato's Closet tax-free August 2nd through 4th for back-to-school styles. We sell the trendy, gently used styles you need to make a difference in the world and in your wallet for back-to-school shopping. Save up to 70% off regular retail prices by choosing recycled styles. Save even more when you shop tax-free this weekend. Make a change that others can respect and repeat. Shop Plato's Closet in North Charleston and West Ashley this year for your back-to-school looks. Plato's Closet, located in West Ashley on Sam Rittenberg Boulevard and North Charleston on Rivers Avenue.
The following day after I recorded last week's podcast, the market took a drastic turn. We received data that unemployment had gone from 4.1% to 4.3%. As a refresher, just a few days prior to that, Fed Chair Powell let us know that he would not be raising interest rates, we would be holding. And so the entire market had this meltdown because unemployment rates were up. And prior to this, we had determined that the United States of America was not in a recession because unemployment rates were so low. But as they are trickling up, there is now a concern. This concern sent a message throughout global markets. The Tokyo benchmark index, similar to the S&P 500, known as the Nikkei 225, completely crashed, and we started to see other global markets deteriorate. In part, this was because of the data coming out of the United States in terms of unemployment. It's important for us to understand that because we are the largest in GDP, what happens in the United States impacts the entire globe. So there was a sense of panic moving through all of the markets. Of course, everyone is having their own economic issues. This isn't isolated just to economic issues taking place in the United States. I should also caveat that Japan is having issues in terms of increasing interest rates. They're also experiencing what is called margin calls. A lot of the times when interest rates are low, people tend to borrow money in order to invest in the stock market. And when they do that and interest rates start to go up and the market starts to see an issue with borrowed money, they will do what is called a margin call. I don't want to get too heavy into that because that would be sidetracking us from the intention of this podcast. Just to highlight that aside from what is happening in the United States with economic data, it was the perfect storm on the issues that they have taking place. Now, their issues and their crash also sent fears to our market the following day. So you can kind of see how it's this sort of never-ending cycle of panic that starts to circulate across the market. We started to see massive deterioration in our stocks in a short period of time. We experienced what is called a correction with the NASDAQ. We didn't quite experience a correction in the S&P 500. So just to be clear, a correction is when the stock market drops by 10% or more. A crash is when a stock market drops by 20%. So we experienced a correction with the NASDAQ, which, as a reminder, the NASDAQ is an index that monitors tech companies. And in Japan, the Nikkei experienced a complete crash, dropping to, I believe, 22% from their all-time high. Now, what came after all of this, which took place in the span of 2 trading days, is what is really important for us to pay attention to. During those 2 days, from its all-time highs, the Dow dropped by 6%, the S&P 500 dropped by 8.49%. As you see, not quite a correction, but still a relatively steep drop in just a matter of, a short period of time. And then the Nasdaq dropped by 13%, definitely entering a correction. What we saw hours after this was when the Nikkei opened, we saw it have its best day ever, making a recovery of 10.2% in one day. That stock soared. It was its best day since October of 2008. This is testament to how volatile the markets currently are. We did start to see somewhat of a recovery here in the United States, but not nearly close to the recovery that we witnessed with the Nikkei. As a matter of fact, right now, as of recording this, we are starting to see the market deteriorate again and lose everything that it has recovered in the last 1.5 days. This is our reminder to be mindful of how we are allowing for outside events to impact the way we feel. I understand that most of the time we're so caught up in the moment that regulating our emotions is something that is challenging. Sometimes we just need a little bit of a reminder, and that's what I'm wanting to give you today. Obviously, money is extremely triggering. That is why most of us do not participate in investments because of how triggering it is. I want to just remind you that this is part of the process, and it is important for us to emotionally unattach from what is happening to the market. A correction or anything close to a correction is extremely important to the market, most especially when we have had increases in 7 months up to 19%. This type of growth is not normal and it is not healthy. Healthy is what is happening right now. And I understand that this is the complete opposite of how we understand things to be good. Typically, when something negative is happening, we look at it as negative and we don't take the time to process how this negative experience can be truly helping us for the long run. We never want our assets to be overvalued. Never. And so the process of a correction is to correct any overvaluing that may be taking place in the market. Typically, with a lot of new investors, when we start to see headlines or we start to see crashes or corrections take place, this naturally generates a lot of fear within us and it creates panic and it drives people to start selling out of the market. I want you to reflect on how we saw within the last 2 days the market start to recover and then it started to come down again. Imagine trying to time the market. It is impossible. One of the biggest mistakes I see from newer investors is this innate desire to want to beat the market or think that we're smarter than the market by selling out during a panic time and then trying to buy in before it fully recovers. You all, that game is really hard to play. And I strongly suggest staying away from that. If you do experience it, I know through experience myself that you will eventually learn not to do that. I have personally gotten burned trying to do that. And so I am speaking from personal experience, but sometimes my personal experience isn't enough. And sometimes we have to move through it ourselves. And so I plead with you that as we go through this volatile time, you instead take the time to invest in your education of what is happening in the markets. A lot of the times what is helpful is understanding that these types of events are occurring over and over and over again. And they're truly not reasons for us to make any drastic decisions from, but they are opportunities to learn from. As a reminder, drops like this in the market are opportunities to continue building your portfolio for a less expensive price. You're listening to Investies. If you have found Investies beneficial week after week for the last year, or if you're a newer listener and have also benefited from the content that we continue to produce, I would love to ask you for a small gift. If you can head over to Apple Podcasts, take a moment to rate and review the podcast. This helps amplify our work, or perhaps you've already rated it, then I'd like to ask for you to share it with someone else who needs this type of information. We appreciate you all helping amplify our work beyond our current reach. We celebrate 51 episodes alongside you. Thank you all. Also, before I go, I just want to make sure that I bring Asia Simpson her flowers. She works so hard to contribute her creativity in the music scoring of every single episode. Asia, your ability to produce the music around our content, I find so beneficial. It helps us process the information, it helps us digest the information, and I believe retain the information. So I appreciate your contribution in these last 51 episodes. Thank you all so much. We will be back with another episode next week.
Shop Plato's Closet tax-free August 2nd through 4th for back-to-school styles. We sell the trendy, gently used styles you need to make a difference in the world and in your wallet for back-to-school shopping. Save up to 70% off regular retail prices by choosing recycled styles. Save even more when you shop tax-free this weekend. Make a change that others can respect and repeat. Shop Plato's Closet in North Charleston and West Ashley this year for your back-to-school looks. Plato's Closet, located in West Ashley on Sam Rittenberg Boulevard and North Charleston on Rivers Avenue.